Alrighty, good morning, my friends. It is Friday, April 25th of 2025. Some pretty good price action yesterday that I want to just quickly browse over, and then we'll go ahead and look at what the market's telling us for this morning. I'm going to show you the 3 minute very quickly here just to show you the signals that we got that would have bolstered our entries on the 512, and then we'll look at the 512. Um, Yesterday was a nice bullish move. We did talk about in the pre-market yesterday, or at least in the news report that I sent out yesterday, that on the pullback going into yesterday morning, when we pulled back to this area, we did defend the 38 retrace. And we did talk about how if we were to weigh things for the bulls and the bears, they defended that 61.8 retrace back from the week before, and pretty sure, or back at the beginning of the week there. And then as we pulled back, coming into the open yesterday, we saw that we defended the 38% retracement of that secondary leg, right? So we had the first leg up, the 61.8 retracement almost perfectly to the tick, and then we created this secondary leg. And that secondary leg, they defended the 38 retrace as we were coming into the open yesterday. So we laid out that there were some decent bullish clues, albeit a little bit messy because we were still inside of the major swing high and the major swing low of the mid-April highs and the April lows. So when we came in yesterday morning, we noticed that the market was defending the 38 retrace and starting to travel back out from there. So there were some clues for the bulls. When we came into the open here on our 512 tick chart, this really was the sexiest thing you could have done yesterday, was to buy the pullback to the roadmap level where we got a picture perfect bullish divergence on the 3 minute chart here. So if you look, this is what we would have seen coming into the open yesterday. Now you can, if you look, they did push right to the first roadmap level and pull back out of the open. So technically, if you shorted that first level, again, held perfectly, and then you got the pullback and hopefully took profit right at the next roadmap level where we got the bounce. Welcome in, Cherry. So we have a failure right off the first roadmap level with almost no risk. And then they pull back. And like I said, if you were looking for a target, the target was right to the next roadmap level, but you wanted to take your profit right in front in case it bounced in front. So they came down, and right there, orienting yourself for the bullish side of things, you get your first roadmap level with a bullish divergence on the 3 minute chart. So that was it. If you took that trade, how much risk did you have to take? Maybe 2 points, and you got the low of the day, and the market never came back. And I feel like almost every morning that I do these broadcasts, we get a perfect entry for the low of the day or a perfect entry from the high of the day. And we have a nice 3 minute signal. We hold the level with nearly no risk. Sometimes it holds to the tick or with less than a point. And then it goes, and if you take that one trade within the first few minutes of the open, or sometimes the first few seconds, that's all you have to do, right? So if you look and zoom out, this is what happened for the rest of the day. Market closed up over here, and there is that entry. So right there out of the open, again, not cherry picking anything. This is exactly what happened yesterday. You had a perfect opportunity to get long. Now, as they broke out and started to push higher here, they did come up right into this next roadmap level at 54.81. They did just go ahead and push right through the major eye level, but came up right to the next one where we got the next clear bearish signal on the 3 minute chart. So there was another short opportunity right up off this level. But what I want to talk about more importantly is before that happened, you got another long on the pullback to these roadmap levels. And this is, I know there's some new people in here, so this is the type of stuff that we see happen. If we see price break out through a roadmap level, a lot of times they come right back to it and they give it a kiss for the bounce to the next push in a bullish scenario, right? It can happen on the other side where we break through a level, come back, give it a kiss, and then keep going lower. And that's exactly what we see here. So holds that first roadmap level, 3-minute signal, bounces out. We pull back, and if you were looking for a long on the pullback, they came right back to that roadmap level that they broke out from. And look at that big 3-minute divergence forming as that was happening. We pushed up to a much higher low. The RVI was at a lower low. And on the 512 tick chart, the short time frame chart, there's an even sexier thing that lined up right there as well. So another picture perfect long opportunity, big 3-minute bullish divergence forming, and that textbook pullback to the roadmap level. Then we, like I said, we come up and there was a short opportunity here, and maybe a sign that if you were long from there to take some profit in case it pulled back to your entry. And that was still, even though it looks close, that was 54.60 to 54.81.82. So there were still 20 points of profit on that next long opportunity. So you had that, you had the short opportunity, and then right up here as we came up right into the next major roadmap level, as you can see, it's like a freaking stair step up and stair step down these levels and almost every market that we look at. So they step up and come right to the next level with another clear 3-minute bearish signal for that pullback. And again, this pullback might look like not much because the ranges are so wide here, but that's still a pullback from 5,500 to 54.86.85. That's still 15 points in the ES, plenty of opportunity to make money. So these were just some of the notable rotations that we got 3-minute signals on. Now I want to go down into the 512 and show you what I was seeing down there as well. So let's bring that up and we will take a look here. So as we came into the open, here is that first tag of the roadmap level at the top end, where we did get a little local 512 bearish signal right off that swing high, right? You can see not only was it a bearish divergence from that previous swing, but just from there, you had that nice, very local bearish divergence. So if you were watching this in real time, again, seeing us come right up into that first roadmap level and seeing the bearish divergence potential from that swing. Again, if you tried the level, 54.13 took on almost no risk, and you got the pullback again, hopefully taking profit at the next roadmap level. Now, like I said, there was something else lining up, and maybe I mixed that up with this pullback somewhere. But there was a perfect test of the 200 moving average and the roadmap level here, right where we just talked about seeing the 3-minute signal lining up perfectly. So that was right where that first 3-minute long signal was. And you got that nice 512 divergence, which was just an extreme push lower compared to the previous swings below that. And there's that textbook tag of the 200 moving average after basically the crossover. So first test after the crossover, 200 roadmap level, 3-minute bullish signal. That's all you needed yesterday. From there, they went ahead and ripped higher. Now we can come back and look at some of these pullbacks. So if I go down to the 3-minute, just to show you, and I wish I had a lot more screen real estate, but it is what it is. When we broke out here, the big 3-minute bullish signal was up at 54.58. So as we broke out to higher highs, here is that pullback. And when they pulled back, there's that tag of the 200 again. Now, in this case, it wasn't a perfect hold to the tick. They did kind of peek through it. But for all intents and purposes there's the hold of the 200, the roadmap level, the 3-minute bullish signal from the major swing low, and then the rip higher. And if you didn't take the trade there or you did get stopped out there, you then got that textbook trade where we get the 3-minute signal. It starts to break out, goes in the direction of the signal, then it confirms, and then you get that tag of the roadmap level to get in. to the tick, basically. So right there, beautiful long. But on the way up, I did skip one other notable thing here, and that is as we're ripping higher here from that nice 3-minute bullish signal out of the open there, they come up and get through the next major roadmap level here, and they pull back right to it and bounce. And again, there's that example. I talked about it when we started the broadcast, getting through a roadmap level, kind of slicing through in a strong push, and then coming right back to it for the kiss. So you had a great long opportunity, and there was a huge divergence showing up on the short time frames there, right? So there is your setup. Big bullish divergence holds the level. If you took the level, you took less than a point of risk, and then again, never came back. So again, beautiful opportunities yesterday. Just how the cookie crumbled. We could have came in and the market was wonky, but 9 times out of 10 we come in and this is exactly how the market's reacting to these levels, right? So high out of the open, holds it to nearly to the tick. Low of the day, holds right almost to the tick, right? We come up, we pull back right to it. We come up to the next level and even pull back from there. But here's a textbook thing we teach in the roadmap service. If it holds the FMA on a pullback, well, we're expecting that to come right on back and test that high. So if you did get short from up there, expecting the major roadmap level to hold, you only got maybe a 2-3 point scalp to the FMA. And that's why I tell you, if you're in a trade, the first target is right into the FMA. Whether it's a little 2-point scalp or it's a 4 or 5 point scalp, that is where we expect the market to potentially hold. So it held perfectly and then went right back through, and then we didn't really get the next sexy setup until we broke out through here. And notice, even though it did cut through by, okay, in this case, 2 points, we still came to the next major roadmap level and started to pull back, and you had 2 short opportunities from the next roadmap level, right? So even though it wasn't picture perfect hold to the tick, it still held within less than 3 points and pulled back. And then there's that hold from the high the day before, right? And then the push up to get the pullback off the next roadmap level. In this case, you can see once again, basically to the tick. And then they pulled back and they held the 200 right at the end of the day. Now that pop, if you guys remember, there was that big jump there just after the market closed, at least for the official 4 p.m. close. And they came up and they popped, and for all intents and purposes, they pulled back right off the next roadmap level again, right? We missed it by literally 3, maybe 4 ticks, and then pulled back. And notice the previous resistance, which was the major roadmap level. There's a reason that level's on the chart. They pulled back and bounced once, twice, 3 times, 4 times before the market closed. So you had 3, 4 opportunities there to buy that for some scalps. So that was how it crumbled yesterday. And then when we came into yesterday's Globex session, once again, if you zoom out and look at what happened here, basically up until about 6:30 in the morning, we just traveled back and forth between these 2 major roadmap levels, right? It held it yesterday, basically the high of the day, pulled back, held this one all through that extended trading hour. Then the Globex session opens and they pull back and they hold it again. Like if you bought the pullback to the first roadmap level last night for the Globex session, you got the low of the Globex session, right? It never came back to that low. And then we rejected right off that next roadmap level to the tick. So we missed it the day before by 3 ticks. And then in the overnight, they came right up and gave it a kiss to the tick. So right there, obviously, if you're long, you want to be taking profit in front of the roadmap levels, probably right here at 38. But then you had your short opportunity right up there, right? So it pulled back. Then we held the 200 moving average and basically that lower roadmap level to come up, and basically could never really get through it. And here's that example of cutting through, and then coming right to it, holding, and then that begins the bigger pullback. So again, not beautiful there, but there's the first test, right? The second, third, fourth test, not as much weight. And then finally, we then pull back. And even on the pullbacks for 2 times here for like an hour straight, we kept holding the major roadmap level. So, I rest my case. These levels are the best levels you're ever going to get on the S&P. There's no way you're going to get anything more accurate than that. And now as we come into the open, we're starting to pull back, and we just rejected. We're just testing the 200, basically rejected it to the tick right here. And now here we are testing it once again. So that is basically how everything crumbled here just in the last day. Still not cherry picking a single thing. I'm not going back finding the perfect scenario. I'm showing exactly what happened, right? And it's been working out great. So let's go ahead and jump up to the higher time frames.